feel like there's been an extra level of uncertainty that's threatening your investment plans? At RCS Financial Planning, we know that bear markets and recessions will always come and go. Unfortunately, no one quite knows when they will begin or end. The market's volatile reactions to it all may have left you wondering whether you have the right approach to investment selection. So today, I'm going to outline how we select investments for our client portfolios. I hope this outline of our process will help you assess whether you're doing it right or if you should seek guidance from a professional. Step 1 is a process of elimination. The variety and volume of investment choices is expansive. Luckily, we can quickly eliminate most of the choices. And no, I don't care how the fund has performed lately. Instead, we weed out the speculative or active product providers because they're playing an entirely different game than the one we believe is best for long-term success. Step 2, we then select the best of the best. After we eliminate the speculative product providers, we're left with a much smaller but still sizable pool of choices. Our due diligence process aims to identify those with the most robust sources of expected return and to understand how they interact with one another across various market conditions. Step 3, we invest the product packaging. Beyond the investments themselves, there are the containers in which the investments are delivered. There are traditional mutual funds, exchange-traded funds. There are also target date funds, hedge funds, private placements, and more. Regardless of the wrapper, the fundamental question remains the same. Is the provider managing your money in an appropriate, evidence-based, cost-effective way? We examine each product's prospectus to avoid the overly complex, the suspiciously opaque, and the unnecessarily expensive. Step 4, we incorporate you into your investments. We get to know our clients very well, so we understand where they are trying to go. Even a world-class investment won't do if it doesn't align with your beliefs and goals. There are a number of things about you that will influence the specific recommendations that we'll make. How long do you have to invest toward your goals? What is your tax situation? How about your cash flow? Then there's your risk tolerance. Are you comfortable taking bigger risks in pursuit of a greater potential reward? Also, most of our clients come to us with existing investments, some good, bad, and some awful. There are costs to transition out of these investments into a more comprehensive portfolio. Your tax situation and account types will dictate how fast and how far we can go in pursuit of the ideal. Step 5, we never stop learning. New studies can change or add to our existing assumptions, and our portfolio construction models will adjust accordingly. So, how do we select the funds that we use? The answer depends on how best to extract the most reliable sources of return from a highly efficient market. It depends on making practical improvements as opportunities present. It depends on what you want and need. One thing fund selection should not depend on is a reaction to the daily news. The world's financial, economic, and political events will impact your returns. But just as weather is one thing and climate is another, we remain focused on harvesting seasons of expected return and strategically navigating the volatile days that will always come and go. We favor investment product providers who do the same.